Hi, everyone. Welcome to this wealthmanagement.com Fast Chat. I'm David Armstrong, the editor of wealthmanagement.com. Today, we're speaking with Matt Brown, the CEO of CAIS, an alternatives investment platform for independent financial advisors. Matt, thanks very much for joining us.
David, it's great to be here, and thanks for having me on Fast Chat.
So we know everything that's going on with the markets now, the need for alternatives. We see this in our surveys that we do with advisors. The need for or role for alternative investments is growing amongst advisors. You want to talk a little bit about why you see that happening, why that's happening, what the need is?
Yeah, sure. And again, thanks for inviting me on your program. You know, this is a real moment in time, what's happening right now. You're seeing a lot of factors coming together for the first time, driving a rise in the allocation of alternative investments from the advisor community. You know, as you know, and many on your listening program know, U.S. wealth management is north of $40 trillion and largely comprised of the 60-40 portfolio. And over the next decade, those numbers are supposed to rise somewhere close to 60 trillion in terms of total wealth management. So not only is the pool getting bigger, but the allocation rates to alts are going up. That's leaning into a reallocation of close to $10 trillion of new capital coming into alternative investments over the next decade. I just wanted to kind of level set on that because that's going to factor into a lot of what's going on right now. Some of the trends that are driving alts adoption from the advisor perspective are one, somewhat the disappointing performance of the traditional 60-40 portfolio. You're seeing many advisors not happy with the performance of their client portfolios and looking for, no pun intended, alternatives. And that is leaning into a more three-dimensional portfolio. We're not going to say that institutional allocation rates to alts are going to become overnight present in client portfolios, but it's definitely a journey. You know, demand for alts is one thing, but actually adoption of alts is something else. The advancements in technology, the advancements of educational services that bring usable, digestible content for advisors around alternative investments are actually allowing them to understand in a much deeper way than ever before how to understand strategies and implement. So when you think about demand meets accessibility, meets education, that's really lifting the advisor's ability to implement a wide range of alternative investments into a client portfolio.
Yeah, you've spoken in the past about the new era of access to alternatives. And, you know, it's one of these things where, given everything that's going on with the markets and, like you say, the failures really of the 60-40 portfolio, I think alternatives would be far more widely used by advisors if there wasn't that friction there, that difficulty of use. Explain to me what you mean by the new era of access and what's driving that.
Yeah, there's a few factors there. The new era of access, you know, refers to actually two sides of the same coin. It's not only just advisors having, for the first time, true access to a broad menu of alternative investment funds and products, but also the asset manager community, the alternative asset management community, having now improved access to the wealth community, the advisor community. So when we look at kind of some of the factors that are driving this new era of access, you know, one of them that is not spoken about or talked about much is what's happening in the asset manager community that makes them more attractive to the advisor community. So you have firms now that are investing a tremendous amount of money to accommodate the advisor world. Taking an institutional platform in many cases and now transforming it to understand the needs of a financial advisor. It's a much different audience to cater to. So creating educational materials, investing in the client service teams and sales teams, investing in new products that are more kind of, we like to say, kind of more wealth friendly. But if you can get access to private equity in a evergreen structure that's open-ended, that is lower investment minimums, that has some opportunities for liquidity along the journey. These are the products that newer advisors are going to start testing the waters with. So this new era of access not only meets the demand from the advisor side, but the asset management community is responding, and they're becoming better at catering to the needs of the financial advisor.
When we talk about alternatives, particularly on the new kind of wrappers or structures that you're talking about, it's a wide Cool. There's a lot there. Alternatives cover a great variety of investment options. And technology, what you guys do, is really kind of helping advisors sort through that. Can you just talk about broadly how technology is changing the game for advisors and asset managers? How does technology play?
Yeah, technology has been obviously the huge game changer here. Alternative investments historically designed for single large investors, not scalable processes. And what tech has done now is really successfully looked at the entire investment journey from the pre-trade experience, which is accessing the product, learning about the product, doing the due diligence, that piece, to the trade experience, meaning able to buy it easily through an automated subscription processing technology, all the way through the post-trade experience, which is really the data management, document library, or the very needed integrations with key ecosystem partners like the custodians, so reporting actually shows up. So what tech has been able to do is completely modernize the process of investing, making it much easier, much more scalable. And as we know, financial advisors have a lot on their plate, and they don't want to be dragged into the kind of the plumbing and piping of operations every time they want to make an investment in an alternative investment fund. So we're able to really, at the CAIS level, take a lot of that pain out.
Where do you think this is going in 5 to 10 years? Are alternatives going to be as easy for an advisor to use as an ETF and a mutual fund? Is it going to be that fluid in an advisor's workflow?
I do think that's the goal. I don't see the end of subscription documents, but I do see the rise of QSIP-based or ticker symbol-based alternative investment funds. We're seeing it now. You mentioned structures and wrappers. There's a lot going on in that category, trying to figure out how to get the best strategies delivered in the most easy to use investment structures or wrappers. We've seen the rise of, ticker symbol interval funds as an example. You're seeing kind of short form subdoc, non-traded REITs and non-traded BDCs. These are all easier ways to invest structurally. And some of those structures, of course, have the opportunity for some liquidity along the journey, which is also making it more palatable. We always kind of joke, if we can all get on an airplane with a TSA number and somehow that's convinced everyone that we're not bad people, I actually think there has to become a day where we can use a number to invest in a fund. So a pre-qualification number, where an investor has gone through the AML KYC, has their accreditation verified, and that should be able to be used whether you're investing in Blackstone, Apollo, Carlyle, or any other fund. So there are advancements on the drawing board to make this just a lot easier than it is, but that is the push right now. If you look at where a majority of the capital is going to be coming from over the next decade, and let's just say it is up to $10 trillion of capital coming out of the traditional side, the vast majority of that money is not going to come from existing alts users. It's going to come from the broad universe of advisors and their end clients who have never actually invested in alts. And their first products are not going to be the more sophisticated, longer lockup drawdown vehicles. They're going to start with things they recognize and that are easy to invest in.
Yeah, we recently saw that study of KKR thinking that maybe up to 50% of their fundraising is going to come from the private wealth channel. It's an amazing turnaround. I'm going to give you a chance to talk a little bit about CAIS specifically. You mentioned that technology broadly is helping advisors navigate this world and weigh options and figure out how to invest in these products. What does CAIS do for advisors, and how would you differentiate what you do from some of the others out there?
Yeah, sure. In terms of the broad, the field of others out there, we're very much supportive and a champion of anyone who wants to kind of be disruptive and make the advisor experience better. The system is archaic right now in terms of alternative investments. It will change over time, and we welcome everybody who wants to be part of that journey to jump in and make a contribution. CAIS really has two businesses. We have what we call our marketplace business, where an advisor can log on to our platform, can seek and search for different funds by strategy, by wrapper, and they can build a portfolio, and that menu exists. It's all pre-due diligenced by Mercer, which is a third-party checks and balance that's built in. Not many RIAs have of the strength of a due diligence team that they can always rely on, and that really helps solve that issue. Then on the marketplace, they can transact seamlessly, and then they have a full post-trade experience. And that's kind of our end-to-end marketplace. That can be curated and tailored. So if you're oftentimes one of the larger firms like an IBD or a larger aggregator, and you want to kind of look at the menu of funds and say, okay, we just don't want all of it, but we want some, or the technology journey has to be woven into the technology platform that exists within the firm. We do all of that. So it's either an end-to-end or a customized journey on our marketplace. The newer part of our business is what we're calling solutions. And that's really recognizing that our marketplace may not meet the need of every advisor. So the technology componentry that makes up our marketplace is being pulled apart and being delivered in part to different advisors. So let's say, for example, that you're an RIA or an IBD that has historically done a lot of alts yourself. Maybe you don't need due diligence teams. Maybe you don't need a product menu. You have your own. But what you really need is a trade or a post-trade experience for the funds that you have. That SaaS business allows you to use our technology for your products. It's an off-the-shelf way to really get our chassis of our technology and bring it to the benefit of your business. And so as we think about the journey of CAIS, we'll be evolving our SaaS product menu over time, delivering different features and services that you can get access to in a bespoke way, or you can enter into our marketplace and see what's available there.
Well, it's exciting stuff, and I'd be remiss in not pointing out the educational material that you all have too for advisors, kind of at any point of experience that advisors have or sophistication with this stuff. There's something there.
Yeah, the CAIS IQ platform, it's called CAIS IQ, as you know. So the CAIS IQ platform was a real commitment starting, 5 years ago, when we realized that, just solving the operational and technical elements of making it easier or bringing access isn't going to get the job done. You really have to get to the core issue, which is there's for the most part, a need for improved learning around alternative investments. Advisors need to have more confidence in implementation, more confidence in speaking to their clients about alternatives. And so we realized very quickly that we both have to be not only a product menu and platform, but we really have to be in the education business. So we've invested millions of dollars in a state-of-the-art learning platform. And we've actually found that some firms now are actually mandating learning prior to investing. So if you're part of a firm that uses the CAIS platform for alternatives, they may bake in at the home office level some rules of the road that says, okay, advisor, before you invest in the XYZ private equity fund, take the fundamentals course on private equity, and then also the course on the fund. And then that will unlock your ability to buy the fund or invest in the fund on behalf of your clients.
That's fantastic. Matt, exciting stuff. Congratulations with all the success that CAIS has had. It's a new era of investing here beyond the 60-40 for sure. It's coming.
New era of access. Absolutely.
Thanks very much for joining us. This has been David Armstrong, wealthmanagement.com Fast Chat. Talk to you soon.
David, thanks so much. Take care.